September 24th, 2024. Today was an outside down day that reversed back into an outside up day. And the stat is that 70% of the time an outside down day will close in its lower third. But that's for, a typical outside down day where you start off with a big bear trend in the market. Just one second. The market continues in a big bear trend for most of the day. Here, we're on bar 7 and we've gone outside down. So what's the market going to do the rest of the day? The daily range is already reasonably large, so it's already 20 plus points. Do I think today is going to be one of those 100 to 120 point bear trend days? Probably not, just because they're pretty unusual. So it's most likely that I think that this is part of that 30% where it is not going to close in the lower third of the day. Did I necessarily expect it to get all the way back up above the high? I wasn't against that idea, but I wasn't positive that we were going to get a rally all the way up to a new high and close basically on the high of the day. But something to keep in mind is that all the stats that Al has, they can definitely trip you up because when you have a bear trend and you think to yourself, okay, 20% chance. So when, the stat that I'm referencing is when you have a bear trend from the open that lasts the first 40, 50 bars or 20 to 30 bars, the 40% of the time it goes sideways the rest of the day, 20% of the time it resumes down in a bear trend, and 20% of the time it reverses up into a bull trend. And that's all true, but the thing is, when you've been trading for long enough, you'll start to learn to pick out the context in which, the 20% bear trend seems a little bit more likely, so it might be more like 40% and things like that. So while, yes, it's true that 70% of outside down days close in their lower third, the context was setting up for this to be maybe only 40% chance that this actually closes in its lower third. So with that being said, bar 1, the bear bar with a big tail on the bottom, you can see we basically just tested yesterday's high and then sold off immediately. And it's pretty similar to what we did yesterday when we tested the prior day's high. We sold off immediately, and bars 1 and 2 looked similar today than bars 1 and 2 yesterday. Part of the reason being they're at the prior day's high, same as it was today. So bar 1 immediately tested above yesterday's high, which is not really a very strong buy signal bar on the daily chart. And you can see we found sellers above that bar almost immediately. So it's a bear bar. The problem with selling is that you have so much trading range price action in here. You know that if you're selling reasonably high in the trading range. So I think that's a good thing. However, you also know that there's a ton of trading range price action here, which could prove, pretty difficult for any sort of trade you're going to take. Bar 2, consecutive bear bars, bar 1 and bar 2. Bar 1, you can see we traded down and then back up, and then bar 2, we traded down. So it's possible this is a two-legged correction. Bulls, we were always in long in here, but it's trading range always in long. Then we have a big gap up, which is relatively parabolic. So the bulls were hoping that this gap was going to lead to a new bull trend, and this is a two-legged correction and a pullback from the new trend for the bulls. Bears are hoping that it's a bull trap above yesterday's high. Now we're getting a reversal back down. I think it's a bit more likely that it is a bear trap, and that we are going to get more of a reversal back down, but I'm not really sure that it's all that bearish to sell below bar 2. So you can do it because it's consecutive bear bars 1 and 2. We're always in short on the close of bar 2, and you're selling reasonably high in the range. So there's no problem with that, but you're probably going to have to sit through a couple of pullbacks. Bar 3, a bull bar, but a doji bar. So how badly do you want to buy above a doji bar? It's not really all that great. Had bar 3 been closing on its high, it was a possible low of the day, thinking that we had a double bottom with the big gap up, and that we were going to get a breakout above the neckline and a measure move up. We got pretty close to the all-time high. Actually, I believe we got above it. Hold on. Let me go to the current. I believe we did break to the new all-time high today. So, no, we didn't. Sorry. So the current all-time high is 5797.5, and we got to 5793.75. So we got really close, but we were unable to break above the all-time high. So bar 3, probably sellers above because it's a doji bar. Like I said, had it been a bull bar closing on its high, it would have been a reasonable enough chance that this was the low of the day to take the buy above bar 3 for a swing, but it's not really all that great with the doji bar. An outside down bar on bar 4, so sellers above bar 3, probably also sellers around a 50% pullback of the move. You can see bears, whatever, maybe they sold below 2 and they're looking to scale in. The sell-off actually ends at the low of 3 if you think about it. Oops. So it starts at the high of the leg and it ends at the low of the leg. Although this is a bull bar, there were bears who were selling down here because that's the only way the price got down there. So the leg is the entire move from the high to the low right here. So traders were selling the 50% pullback of that leg during bar 4. Outside down, so breakout mode, and basically a doji bar. So not really all that bearish, but still always in short, still probably going a little bit lower. You can hold short. 5, another bear bar, but a tail on the bottom. Again, still okay to be short, but it's not all that great. We did get a first reversal up bar 3, so if we do get a second reversal up on bar 6, it's possibly a high 2 buy, and it's really not great to stay long after a high 2 buy on the open, because that's a relatively reliable pattern for the bulls for at least some sort of bounce. However, the channel down is reasonably tight, so if we do get a good looking bull bar, it'll probably be a more sideways style bounce. 6, another bear bar, but a big tail on the bottom. Probably buyers. Buyers somewhere below. The bulls are trying to get a reversal. You can see from all the buying pressure, but not so sure that they're going to get it anytime soon. They need to get a good bull bar closing near its high, and even then, we have a lot of straight bear bars, so it's not as good as it could be. And then bar 7 is a give up bar from the bulls. They were hoping to get an early reversal, and they were unable to, so the bulls give up, and that's what causes the huge give up bar on bar 7, trading outside down. You know, there's probably buyers below yesterday's low, so 7 more of buy the close bar than anything. But you also know that the move from bar 4 to bar 7 is going to get a second leg sideways to down. So probably only for a scalp if you're buying. Bar 8, a bull bar. However, the problem with bar 8 is that it does not close on its high. Had bar 8 closed on its high, it would have been reasonable to hold for a swing, or to buy and to hold for a swing, but it was unable to do that. So it's really not as great of a buy. For me, when I see bar 8, I think we're going below bar 8 and below the low of the day. It doesn't mean we're going far below. We could go below the low and get one more reversal up. But if bar 8 was going to be the low of the day, it probably would have closed on its high, and it probably would have been a bit of a smaller bar. Risk reward really isn't all that good with how big the bar is. So most traders don't want to buy above bar 8. However, if you buy above bar 8 with a wide stop, you'll probably be able to make money. 9 is a low one short for the bears. You can sell it taking a chance that we've started a bear trend, but you're selling, possible third leg down, 1 pullback, 2 pullback, 3. However, I think 7, this move is strong enough for me to reset the market cycle. So I think of this as 1 pullback and then some sort of second leg down. So the bulls are hoping that 9 is a breakout pullback. They want the buy above 8 to be successful, but we were unable to close the gap with the 6 low. Not really that great for the bulls. So probably going to be buyers if we get to a new low, but we might have to get to that new low first and trap out the bulls who are buying above 8 with a tight stop. 9, an okay swing sell, like I said, for the bears. Probably, I don't know if I'd put my stop directly above 9, but probably somewhere up here is okay. Problem is, that the bar 7 high is a magnet because it's a sell climax high. And sell climaxes are magnets. So you have to be thinking we might have to rally up into this area. 10, disappointing follow through if you sold below 9. However, you're not expecting it to go straight down if you take the short. You know that it's probably going to go more sideways to down since we have a reasonably good bull bar on bar 8. And bar 7 was really climactic. So we're not going to sell straight off into a giant bear trend. Bar 11, the doji bar. So you can see consecutive doji bars 10, 11 increases the chances of a trading range day. So looking at something. Okay. So increases the chances of a trading range and an overall trading range day. You have to just ask yourself, does this look like a leg in a trading range or does it look like a bear trend? It probably looks like a leg in a trading range. The open gap for the bears is good, and we haven't reversed up strongly from this bear surprise, and we have a credible sell below 9. So it's not only is wrong to think that it might be a bear trend, but it's probably still a trading range. It's not likely that it's a bear trend yet. And if it is going to be, it's going to be more of a bear channel, I think. 12, a bear bar, but tail on the top and a tail on the bottom. You can see we're selling off in this area. Had bar 11 been 1 tick lower, it would have been a ledge top, which is when 4 highs are exactly the same. And that is an area of that is a magnet. So when you get a ledge, 80% chance that you're going to reverse back up it within the course of the next day or the course of the next day or so. So if this, 11 had been one tick lower, it would have been a ledge top and 80% chance we're going to reverse back up in this area within a day. But obviously it was not. 13, a bear bar, but a big tail on the top. So probably buyers not too far below 13, probably sellers not too far above though if we get there. But this is still always in short. Still nothing really to buy just yet. 14, a big bear bar, but a tail on the top and the bottom. However, important that 14 closes below the bar 7 low, which increases the chances for the bears that they're going to get some sort of bear trend. However, it's probably going to pull back first. We're pretty far away from the moving average, and it's obviously a reasonably climactic move. An outside up bar on bar 15, a tail on the top and a tail on the bottom. So do you buy above 15? I don't know. I probably would not. I think that the logic of a wedge, there is a wedge, 8, 11, and 14. So it makes sense. It's probably a wedge, and there could probably a couple of legs sideways to up above 15. However, I'm not sure it's all that great to be buying. I'd probably rather wait and see the follow through. 16 consecutive bull bars, but tail 15 and 16. So a reminder that we're still in a trading range. The bears are hoping that this is just a test of the moving average and they're going to get some sort of double top bear flag, but I don't think it's all that likely. These are still pretty good looking. They're still pretty large bull bars, even if they do have big tails. 17, another big bull bar, but again, another big tail. So not really all that great. Do you buy the close of 17? Yeah, you can for, a measured move. We're probably going higher. And that we're probably, 90% chance on any given day we're breaking out of the 18 bar range. So if you buy the close of 17, you're taking a chance that we basically break out above the bar 1 high. 18, 4 straight bull bars. All of them have tails, so I think that's a reminder that this is probably still a leg within a trading range. The bears had a reasonably strong sell-off down to bar 14, so we might rally, but I don't think it's going to be a ginormous bull trend day today, especially with the tails on top of the bars. Had 15, 16, and 17, 18 all been bull bars closing near their highs, that would have increased the chances of a big bull trend day, but I don't think it's all that likely with the tails. 19, an inside bar, probably possibly a final flag. Probably buyers not too far below. Probably sellers maybe not too far above. But you can see I don't want to sell against any of this. It's way too much. And you can see actually it's kind of interesting. You have the spike here, and then the consecutive inside bars is the start of the channel. And you can see over here on 61, we tested back into this area. And the reason that 61 tested back to here is because this was the start of the bull channel. We had a spike, and then a pullback, and then a channel, and then obviously a buy climax. But the lows of channels are always magnets in trading ranges. And this is a perfect example of the low of the bull channel being a magnet. Bar 20, another inside bar. So you have consecutive inside bars, bar 19 and bar 20. You can take the buy. It's a high 1 buy. Probably trying to get back up to the bar 1 high. And you know that you have 6 straight bull bars, 15 through 20. So you know there's going to be buyers below 20 if we trade below it. 21, a big bull bar, but big, huge tail on the top. It does close above the 18 high, so it does break out above the bar 18 high. However, it's really not as great as it could be because of the massive tail. 22, another inside bar, so a bull bar, but tail on the top and the bottom. So again, really not what most traders are looking for. I think traders, for the most part, are hoping to buy for a swing. And this is not really a great environment for swing trades. So I think if you're holding long, probably stop below 19. Sorry, this is a reasonably good environment for swing trades, but we're always in long, so all you're doing is buying. You can buy the closes, but they're difficult to buy. It always looks like it's going to reverse, and we're getting towards the top of the trading range. So if you're long for any reason, I would put my stop below 19 at this point, the start of the channel. Consecutive inside bars, like I said, 19 and 20, consecutive inside bars, 22 and 23. So probably sell it, inside bars, consecutive inside bars usually lead to a pullback and then a deeper correction. 24, a doji bar, but not really, not much to do here. And then 25, another bull bar. You can see we have bull bars from 15 to 25. So we have an 11 bar bull micro channel, and 10 of the 11 bars are bull bars. So probably, very likely that there's going to be buyers below 25. If we go, or if we don't go below 25, it's going to be buyers below the next bar that we trade below. And you can see there are buyers below 25 during 26. 26, a high one buy for the bulls, but a doji bar and a bear bar, so really not as great as it could be, but still okay to be holding long. 27, another bull bar, but a doji bar. 28, again, a bull bar, but a doji and a tail on the top. So still could be better. And then 29, a big climactic bull bar. So basically, when you see this at the end of a bull trend, 60% chance that it's the end of the bull trend. When you get a large climactic bull bar at the end of a bull trend, 60% chance it's the end of the bull trend, and 60% chance that you're going to get one more leg sideways to up. And you could argue 31 was that one more leg sideways to up, or the move back up to that area on 39. What's the target? The target is the bar 29 low. So the 29 low, the bulls who were buying for any reason, like I said, sorry, let me back up. Whenever you get that climactic bar at the end, how it's the 60% chance it's the end of the trend, well, the target for the bears selling, assuming it's the end, is going to be the low of the buy climax, so the bar 29 low. And then you can see, I'm going to speed it up a little bit. I have a couple things to do today. But we basically, we got a wedge pullback. So 1, pullback, 2, pullback, 3, and then a bull bar closing near its high 37. You could buy above 37, but it's not enough of a correction. This, we have 15 bars here, and it's a pretty strong bull move. So it's not really a wedge. Usually when you get a wedge, you're expecting the correction to be about half the amount of bars. But this isn't really a wedge. It's more of a bull trend. So if you have a 15, 16 bar bull trend, you probably have to expect the market to go sideways for about 15 bars. So we had a wedge pullback and a theoretical buy above 37, but not really that great to be buying unless you're willing to put a stop somewhere down here and hold through all of this. So you have to hold through this if you're going to be buying above this, or unless you bought and you scalped out at the high, which some bulls did. So follow through 38 and follow through 39, but tails, and then you can see disappointment 40. Bulls probably exit below 40. I would not sell below 40. It doesn't close on its low, but bears could sell below 41, maybe 42, but the risk is big and you're on the moving average. There's going to be buyers at the moving average because we've had a strong bull trend. So you can see buyers at the moving average causing a doji bar 43, a reversal up, bull bar 45, 46, but we're back into an area where there's probably sellers because it's the top of this sell climax, 42, 43, or 41, 42. I still think you can probably buy up here and take a chance that we started the second leg up. If you look at like a 30-minute chart, actually a 15-minute chart will probably demonstrate it. Right. So if you look at like a 15-minute chart, this is a pretty good move up. And so if you're buying for any reason, you're kind of just taking a chance we're going to get some sort of second leg up to possibly the all-time high, which isn't that far above. It was up here. So it wasn't unreasonable to think we were going to get to the all-time high today. And pullback 47, 48, bull bar closing near its high 49. Do you buy above 49? Well, it's right on the moving average, and it's still okay to take a chance that I think we're starting the second leg up. But you can see the bulls during 50 sold out of their longs around the bar 46 high during 50. So that's disappointing. And then you can see it turned into an endless pullback, right? So the bulls were kept hoping that we were going to pull back to the low of the range and get the bull bar closing near its high, and we were never quite able to. And the bears kept trying to get bear bars closing near their lows. You can see the bulls were getting good-looking bull bars in here, which is one of the reasons, one of the signs you're going to get a good second leg up is you get, good-looking bull bar, good-looking bull bar, good-looking bull bar, good-looking bull bar. Small, but near its high. Not great that it's that small, but still somewhat near its high. Good-looking bull bar. So one of the signs that you're going to get a second leg up is something like that. But it just never really ended up happening today. So you can see we ended up getting an endless pullback, and then we tested the bottom of the bull channel, and then just went sideways for the remainder of the day. So it was hard to want to buy anywhere in here. So pretty interesting day. We went outside down and then large opening reversal up and then sideways for the remainder of the day, which does happen sometimes. For stop orders, not too many today. I thought 9 was fine. You could probably buy the close, 16, 17, maybe 18. Then you could buy above these or buy closes here, but not great. Probably exit here. If you don't exit there, you get out somewhere in here. If you have wide stop, 37 or 38 is fine. I still kind of think this was okay, this area, but you just have to get out somewhere in here. And then that's probably it, to be honest. Maybe you could sell below 52 or 54, but tight trading range and probably still always in long. But the problem with buying up here is tight trading range as well. On the daily chart, we traded above the 923 bar, but there's probably sellers above. So if we break to a new all-time high tomorrow, I would imagine there will probably be sellers there. The weekly chart, Bulls trying to get above last week's high and get a bull bar closing near its high. Again, they want this bar to look like this bar. And if it doesn't, that might be a bit disappointing. So not sure how much higher we're going to go here, but the bulls really hoping that we close above I would pay a lot of attention to the July high. Just make sure we get up, or the bulls hold above it. But it's only 70 points below, and we can cover that in a day. We can cover that in an hour if the bears are really aggressive. So I think it's important to pay attention to this high to see if the bulls can close above 5721.25. All right, like I said, a little short on time today, but that's going to be it for this review. But tomorrow I should be back. My building didn't have water this morning, so I was trying to save my voice because I only have one bottle of water left. So kind of a chaotic past couple days for me. But tomorrow, assuming nothing crazy happens, should be back to the normal schedule, and there should be a live trading video tomorrow.